Rules guiding the accounting process. Today we will be reviewing under this topic the rules of thumb, the rules of debit and credit. Also be looking at several laws of the accounting process, including the debit the receiver and credit the giver. Then we will be looking at some illustration as it applies to the various rules in accounting. Debit the receiver and credit the giver, and we'll be looking at illustration and also illustrations as it pertains to other rules of accounting, including the rule that says your total debit must equal your including the rule that says your total debit must equal your total credit. Also, we'll look at illustration that encapsulate the rules that says every debit entry must have a corresponding credit entry. Now proceeding, we're going to look at the first topic, which is the rules of thumb. Now, under the accounting rules of thumb, we have the debit the receiver, which is very principal, and credit the giver. The sum of total debit must equal the sum of total credit. Every debit entry must have a corresponding credit entry. Now, just to shed more light on this, when we say debit the receiver and credit the giver in accounting, we are talking about a set of transactions. Take for instance, Zonetech place an order to be supplied 10 motor vehicles, and those motor vehicles come in and the company pays for it. This is a transaction involving two accounts: the bank account, the bank or the cash account, and the motor vehicle account. Now, the bank account is taking out cash. That cash is to be replaced with motor vehicle. So in this particular example, the bank account is giving out cash to motor vehicle. So motor vehicle is receiving cash from the bank. So now when we have like our illustration, we said Zonetech makes a purchase order for 10 motor vehicles, and these motor vehicles come in, so the bank is reducing. Hence, we'll credit the bank, which is giving out cash, and we will debit the receiver of the cash, which is motor vehicle. Please note that I said both of them are accounts. Both of them are accounts, and as such they're treated in that light. Now, going forward, we said the sum of total debit must equal the sum of total credit. Where that is not the situation, we will have an imbalanced account. Remember our accounting equation when we said that what is on the left side must equal what is on the right side. Your total debit must equal your total credit. If you have a total debit of $10,000 or 10,000 naira as it were, and you have a total credit of say 5,000 naira, you would have a balance of 5,000 naira, which does not take for instance, if you have a total debit of 10,000 naira and you have a total credit of 5,000 naira, your accounts will be left in balance to the tune of 5,000 naira, and that means something is either being omitted or not presented, or someone is trying to be deliberately fraudulent. Now going to the third rule, every debit entry must have a corresponding credit entry. Remember our earlier example of 10 motor vehicles being purchased by Zonetech. Now imagine where we just get the money from, we get the vehicle and we do not record that we have a vehicle, but we record it in our bank account. that, oh, we give out money. Money was given out to get vehicles, and the vehicles are nowhere to be seen in the books or in real life. So that is where this rule comes into play. Every debit entry must have a corresponding credit entry. That is a principle. It's like the very air we breathe. It is the rule of life in accounting. We'll now be moving forward to the rules of debit and credit. Remember, I said in our earlier class that we have 5 pillars, what we could call 5 pillars in accounting. That is the assets, expense, liability, income, and capital. You know, remember we had established that fact earlier. Now, how do the debiting and the crediting in accounting affect these pillars? That is what this particular section is supposed to address. Every account can either increase or decrease. When you put in money into an account, it will go up. If you take out money, it will come down. That is basically what we are saying here. Now, looking at assets, to increase an asset, you would need to debit it. To reduce an asset, you will need to credit it. The same principle applies for your expense. Should you need to increase your expense, you'll be debiting it. Should you need to reduce your expense, you'll be crediting it. Now, for the liability, should you need to increase the value of your liability, you would need to credit it. Should you need to reduce the value of your liability, you will be debiting it. Also, the same principle applies for our income and our capital. Please note that these particular rules of increasing or reducing the value of your asset, expense, liability, income, and capital works hand in hand with every other rule that has been mentioned earlier. It works hand in hand with the rule of debiting your receiver and crediting your giver, whichever the case may be. And at the end, the sum of your total debit must always equal the sum of your total credit. There is no compromising that. But once that is in place, every other thing should be fine. Now we will be moving on to specifically debiting the receiver and crediting the giver. Now it said we have on our screen as written, treat all accounts as separate individuals who can both give and receive. If we are able to view transactions in this light, it will help our understanding of the whole accounting process. Accounts are mostly prepared from the point of view of the owner, hence making it easy to identify who the giver is and who the receiver is. This we had mentioned earlier. So what this is basically telling us is, whenever we have a transaction, these transactions are expected to be viewed as an individual. You don't say, oh, I am the one. No. The account in itself, the transaction in itself is a two-way thing. Somebody is giving and somebody is receiving. And when you take money to the bank to make a deposit, you are giving to the bank and the bank is receiving from you. When you go to the bank to make a withdrawal, the bank is giving to you and you're receiving from the bank. When we go to the marketplace to, say, buy our foodstuffs, we are paying cash in exchange for our foodstuffs. So when we're able to view things in this light, it makes understanding where to debit and where to credit, who the giver and who the receiver is, way more easier. We'll be looking at some illustrations from this point. Taking our earlier books from ZoneTech, we'll just run along that line and keep the transaction flow going. As at our last transaction with ZoneTech, this is a summary of our books. Capital, the credit balance of 50,000. Our bank has a debit balance of 29,500. We had paid rent for 10,000, office equipment 5,000, cars 5,500. the total debit 50,000, total credit 50,000. I think this also goes to buttress one of our rules that says our total debit must always equal our total credit. If in this scenario, if we had a total debit of 50,000 and a total debit or total credit of 40,000, then we would be looking for 10,000 and we'll be wondering where did this money go to. And until that money is found, the account cannot be deemed as reliable. Okay, now what we had earlier was a summary of ZoneTech accounts from inception to that very point. A transaction, ZoneTech, at being a business venture, has taken up a transaction, and what we have on our screen is a breakdown of that transaction. It said ZoneTech took a loan of 300 million to finance the completion of a job. To the loan, ZoneTech took a loan of 300 million naira to finance the completion of a job. The loan is to be repaid at an interest of 18%. The cost incurred in getting the job done amounted to 300 million naira. ZoneTech received full payment for the job done. The amount received was 500 million naira. From the payment made, ZoneTech was able to repay their loan as well as the interest. Now we are going to have this plugged into the books of ZoneTech. In doing this, we will be applying these various laws that we have mentioned earlier and all that we've been able to gather from the beginning. Now let's take the first statement that was written out there. It said ZoneTech took a loan of 300 million to finance the completion of a job. Before we advance, we'll have this broken down into two sections. There are two of our laws. One of them says the total debit must equal our total credit. Now this particular transaction, we will have to complete this transaction from beginning to end, applying this law of having the total debit equating total credit. Now we said ZoneTech took a loan from the bank. We said ZoneTech took a loan of 300 million naira from the bank. Now remember our law of debiting the receiver and crediting the giver, but that will be seen at a later. ZoneTech took a loan, bank account. That loan was paid into ZoneTech's bank account, 300 million. Our figures on our screen is in thousands, so when I say 300,000, please know I'm referring to 300 million. Our figures are stated in thousands. So ZoneTech took this loan. On our books, we will have to record that they went to the bank and the bank gave ZoneTech a loan of 300,000. Now when ZoneTech comes back home and recording this in their books, we would have ZoneTech. Remember, we said debit the receiver and credit the giver. Who gave to ZoneTech? The bank. So ZoneTech has a loan account for the bank. A loan account indicating that they got a loan of 300 million from the bank, and they'll also be debiting their bank account, having received this money into their bank account, 300 million. In the course of ZoneTech now, in the course of carrying out the job, incurred contract expenses. Now it was stated that the contract expense incurred amounted to 300 million, sorry. Now 300 million being spent, where did the money come from? Of course, you're right, the bank. Zonetech will take that money from the bank, from their bank account, and finance the running of this particular project. So the bank account is now the giver, giving to the expenses incurred in executing this contract. So we call that the contract expense. Hence, we'll be debiting the receiver in this case, which is the contract expense, and we will be crediting the bank account for giving to the contract expense. Now, we're getting to the very interesting aspect of it. That is that part where Zonetech gets paid for the job done. Now, our contractor paid Zonetech 500 million naira, which went straight into our bank account, straight into the bank account of Zonetech. How will Zonetech record this? We have a book that says our revenue from contractors. That book is, that particular account will be representing our contractors, hence giving to our bank account 500 million naira. In that case, we will be debiting our bank account 500 million for receiving such an amount, and we'll be crediting our revenue from our contract 500 million. Now, it is said that our loan and our interest on our loan was paid from this particular account, from this particular bank account, using the money we received from our contractors. So if we are paying, I'm glad that we cannot see the other leg. Well, I guess we are very smart, so we can, as much as post the remaining entries. We have a loan repayment account, and that loan repayment account will be receiving 300 million naira from our bank account. Also, we have an interest on loan account, which will also be receiving the interest on the loan. Remember, the loan was given at 18%, so 18% of 300 million will amount to 54 million naira, and that is the interest on loan. That interest will be receiving the 54 million, and as such will be debited to that book. The credit, of course, will go to our bank account. Now, at the end of it all, remember, if you observe, if you're very observant, we have been able to see our principle of debit the receiver and credit the giver play out in this scenario. The sum of the total debit amounts to 1.454 billion naira, and the sum of the total credit amounted to 1.454 billion naira. Like I mentioned earlier, if this was not the case, then it simply means that a particular transaction has not been recorded. Basically, either a transaction has a particular leg of a transaction has not been recorded, hence we will have an incomplete record. Now we will be moving on to our next rule that says every debit entry must have a corresponding credit entry. In this, applying this rule, we'll be breaking it down step by step, one after the other. The first set of transactions that took place, Zonetech took a loan of 300 million to finance the completion of a job. This is a transaction. What are the entries that will play out in this transaction? Now, in applying this particular law, rather than what we had in our previous law where we just have all transactions on one sheet, we will be creating individual accounts for every part of this transaction. Now, Zonetech took a loan to finance the completion of a job. We have two persons involved, who is giving the loan and the person receiving the loan. So on our screen we have two books of accounts, the bank account and the loan account. Remember, from our transaction history, the bank account already has an existing balance, which we have on the screen. You have what we call the balance brought down, which is the existing balance on the on our bank account. Now, having had that existing balance, we received a loan from the bank. Hence, receiving this loan, our bank account will be debited. Our bank account will be debited to the tune of the loan received, and the corresponding leg for this particular transaction will be the credit that goes to the giver of this 300 million, which is the loan account. The loan account in this scenario represents the bank that is giving the loan. So we have 300 million credited to the giver, which is the bank, represented by the loan account, and 300 million received into our bank account. Zonetech debited 300 million. Now our total balance on our bank account now amounts to 329 million naira. That is our net balance, and we have a net liability of 300 million to be paid off. Moving on, the next transaction that occurred was that as Zonetech, expenses were incurred on the process of getting the job done. Now the expense incurred was to the tune of 300 million naira. What are the books that will be involved? Obviously, the expense that has been incurred is one book, but the expense that was incurred, where did the money come from? Which account was able to finance this particular expense? Now the account responsible for this is our bank account, hence the entry we will be passing right now. We will be debiting our expense account to the tune of the expense 300 million, and we will be crediting our bank account to the amount given, to the amount expended in executing this particular project, which is 300 million. So now we have a net balance on our expense account to a debit balance of 300 million, indicating that okay, we have expended 300 million in executing this particular contract. Also, on our bank account, remember we had a balance brought down of 29,500,000. A bank, the loan which we took from the bank, 300 million on the debit, and now we are going to be paying out, we're going to be giving from our bank account to finance our expense to the tune of 300 million. Hence we have a total debit of 329 million and a total credit of 300 million. The net balance is on the bank account becomes 29 million. Moving on to our next transaction, Zonetech received full payment for the job done. The amount received was 500 million. Now, I believe at this point we are already in tune with the process flow of what we've been doing so far. Who received the money? The bank. 500 million. From who? Our contractors. Now for our contractors, we took the liberty of creating an account for them in our books. The name of the account we have chosen to call contract payment account. Now this account is an income account. So we received an income for our job done to the tune of 500 million, and that 500 million was paid into the bank. Contract payment 500 million. This increased our net balance to 529 million from the previous 29 million that it was. Moving on to the next transaction, from the payment made. Now from the payment made, we're referring to the money received from our contractors. Zonetech was able to repay her loan. In repaying the loan, remember Zonetech took a loan of 300 million naira from our loan from the bank. Now we had already created an account for the bank. We took the liberty of creating an account for the bank and we called it loan account, which is a liability account. Remember the previous, as at the time when this loan was given to Zonetech and we created this account, 300 million was credited to this account, indicating that we received, our bank account received from our loan account the sum of 300 million, and now our bank account needs to pay that money back because it is a liability. It is a money borrowed from the bank. Paying this money back, we will be, now in this time, the giver now is our bank account, giving to the loan account the sum of 300 million. So we will be crediting our bank account to that tune, and we will be debiting our loan account to the tune of 300 million. Notice that the net balance on our loan account is 0. That is because this particular book, our loan account, the debt has been settled. That is the indication it is a liability. The liability itself had been settled. We had mentioned earlier that a liability is an obligation incurred by an entity, by an organization, that causes an outflow of economic benefit, that causes a payment, a legal payment by the institution that is liable. So right now, paying what we have now in this loan account is an indication that our liability has been settled. Moving forward, we were charged an interest of 18% on the loan that was taken. Now this 18% will also need to be settled. Settling this totally keeps our book clean of any form of obligation, as it were. Now the loan interest will be paid also from our bank account, and this is an expense. This is an expense. We'll be expensing this particular loan interest because the reason why it is an expense is because we didn't get it from anybody. It is something we promised. It is something an obligation we took on our own. It is the price paid for the loan collected. So we will be expensing it. To expense it, will be given from our bank account to the interest on loan account, to the tune of 54 million. Now going a little further, okay, this next part tells us whether or not we are profitable in our business that we have done so far. As Zonetech, we've incurred expenses and we have also received revenue. Now we did a contract and we received a revenue to the tune of 500 million, and in the course of executing that contract we incurred a contract expense to the tune of 300 million and an interest on loan of 54 million naira. Now this next part is going to tell us whether or not as a company, as an organization, where we were profitable on our dealings. So we have the income account for the contract done, where we received the total sum of 500 million credited to our income, and we have our contract expense, having the expense of 300 million, the initial 300 million incurred in the execution of the contract. This expense matching it against our income. So we have alright, so we will be matching our expense against our income. Now we want to close our income, hence we'll give our income to we'll give our expense to our income and see what is left. Given our expense to our income, we will be crediting our contract expense to indicate that we have transferred that particular amount to someone, and who received it, our contract payment account, which is our income account. So we will be debiting our income account to indicate receipt of that particular amount. Hence, our contract expense will now be left with a net balance of 0 naira, and our contract payment account, which is our income account, will now be having a net balance of 200 million naira. Moving forward, we also incurred, like we mentioned earlier, a loan interest expense, interest on the loan, which we said it is the price paid for the money borrowed, to the tune of 54 million naira. Now that if we look, like we have on our screen, our interest on loan expense account has an initial debit of 54 million naira. Now that 54 million naira is an expense and is going to be transferred to, is going to be given to our income account to warehouse. And let's see how, like the aim here is to determine whether or not we are profitable in our venture. So we'll be transferring this particular expense also to our income account to see how it plays out. Doing this, we'll be crediting, that means we'll be crediting our interest on loan account to the tune of 54 million, and we will be debiting our contract payment account to the tune of 54 million. Having done this, we will be left with a net balance of 146 million. Seeing that there is no other expense being incurred along this particular line, we can confidently say that we were quite profitable, having made a profit of 146 million naira in just one contract that we have executed as Zontech. So you can imagine, if we choose to let's just say we are being lazy, we choose to execute just 10 contracts per annum, that means we'll be having an annual profit of 1.46 billion naira, which is very bad for a company of our pedigree. It's bad. We can do better. We can get to 1 trillion. That's on a lighter note anyway. So plugging what we have done into the summary of Zontech's account, we have capital of 50 million. In our bank account, our bank account has just grown fatter due to the profit that we have made. Remember, when we started, our bank account had a balance of 29.5 million naira, but adding our profit made on the contract that we have just executed, our bank balance has increased to 175.5 million naira. Our rent is still 10 million naira. Our office equipment 5 million naira. Our cars 5.5 million naira. And the profit from our contract, which will be recorded in our reserves, 146 million naira. So we have a total debit of 196 million and a total credit of 196 million, which can be said to be the net worth, in a sense, of our business. We'll be stopping here for now. When we come back next time, we go continue, and I will cut this part come out.